Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, broadcasting live from the SALT conference in New York. And we've got an action-packed lineup of guests ready for you, and today is no exception. But first, joining me now is my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitinn. Lawrence? How's it going?
Hey, good morning. I'm the guy that comes before the action packing.
Well, we're seeing a bit of action in the crypto markets. Bitcoin's a bit up right now. Let's take a quick look, actually. The Coindesk Bitcoin price XBX index is currently trading at $46,544. Bitcoin is up over 4% over the past 24 hours. And the Coindesk Ether price ETX index is at 33.57. ETH is also jumping 4.5% for the day. And the new DFX Coindesk DeFi index is at $601. DeFi also skyrocketing up there over 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, we're seeing a bit of a bounce in the markets.
Yeah, a small bump. We had basically the inflation numbers came out this morning at 8:30 Eastern time, and they were slightly lower than expected. And so what that means is this, is that if there's going to be a taper, it's not going to be sooner rather than later. The market is betting, okay, there might be a taper, but not as soon as it would be if the inflation amount was any higher. And because of that, that means more dollars into the economy. And the presumption is that more of those dollars will end up going into Bitcoin and ETH and other cryptocurrencies. So that's why we saw this slight bounce since 8:30 Eastern time, so a few minutes ago.
Mm-hmm. Interesting, and more economic data coming out throughout the week. Other stories we're looking at, U.S. officials are considering a formal review of Tether and other, or rather whether Tether and other stable coins threaten financial stability, as reported by Bloomberg. There are over 125 billion stable coins in the crypto market. And joining me to discuss is Jeremy Allaire, CEO of Circle, a global payments firm and one of the creators of USDC, the second largest stablecoin with $30 billion worth in circulation. Welcome to the show, Jeremy.
Great
to have you.
Great to see you.
All right, so stablecoins are obviously integral to the crypto market. A lot of traders rely on them to get in and out of positions. It's the foundation of the crypto markets. And so when you hear regulators exploring whether or not they should regulate stablecoins, what are your thoughts? Is there any support to the idea that they threaten financial stability?
Well, I think it's important. Obviously, the growth in dollar stablecoins has been astounding in the last year, and I think the FSOC review, which I think is one of the things that's being discussed, is really looking at if they've grown this far, this fast, what could it look like in 2 years, 3 years, 5 years, and could this become something that's sort of systemically scaled? And you can imagine, given the utility value of dollar digital currencies and what they provide, that you could imagine a world where there's $1 trillion dollar stablecoins in circulation. And at that point, it would be a critical payment infrastructure for financial markets, for payment activity. And so at that point, I think federal supervision makes sense. It's one of the reasons why we are actively working towards a national bank charter as well.
Mm-hmm. And what should that look like? How far should that transparency go?
Yeah, I think, as I like to say, there's not an exam manual at the Fed or the Treasury for how to, supervise a stablecoin infrastructure. So there's a lot of work that's been done by regulators around the world, the FSB making recommendations. I think we're going to hear more about those recommendations through the Presidential Working Group. And it has to do with, liquidity. It has to do with information security, cybersecurity, the kind of fundamental risks that exist, money laundering risks, these kinds of things. So those things are going to be in scope.
So as it currently turns out, I mean, with Tether, most of their reserves, we learned, was backed by commercial paper. Paxos saying that most of their reserves are backed by cash and cash equivalents. USDC seems to be somewhere in the middle.
So we actually announced last month that USDC is, in fact, moving entirely to cash and cash equivalents within this month, in fact, and so we've made great progress on that. And I think we're hearing, the market and what they're looking for, regulators, I think, looking out ahead, and I think our view is if you're building critical financial infrastructure like this, that's what people expect today, and we'll see where, rule sets go in the future.
Currently, is USDC backed by commercial paper and the like, and it was your view that perhaps it wasn't stable enough to back the stablecoin?
We've always operated within the state banking statutes, basically, which, for a money transmission firm, you have to have a full one-for-one backing, and you have to ensure that that's, from a consumer protection perspective, in place. We're examined and regulated by those supervisors, always have been. I think we're just listening, clearly to the market and what the market is looking for in this space. And also, I think, getting a little bit of a sense from comments from regulators on where they think this ought to go, and really just trying to be lined up with market expectations.
Do you think other stablecoins like Tether that are backed by commercial paper should perhaps benefit from a little more regulation and clarity on what is backing their reserves?
Well, I can't comment so much on their practices, but what I would say is, we believe very strongly that a very large-scale dollar market infrastructure that's at the center of not just payments but capital markets activity clearly needs to be a supervised activity.
What do you say to those concerns by some lawmakers out there that there could be a loss in confidence in some of these stablecoins and a run on them?
Yeah, this is going to get into, ultimately, if there are that get developed, that have to do with fundamental liquidity. Obviously, there is a framework for that through Basel III, and how that framework can apply, whether it's to banking or a stable coin. And so I think everyone is just trying to get their arms around, what does this look like at scale?
Okay, so that conversation is ongoing, obviously. Also, a lot of platforms are launched lending products. Circle Yield proposes to offer over 6% if you get onto a wait list. Coinbase Yield product, they're offering their lending product. You can earn 4% APY on USDC. And obviously, this has caused a lot of controversy because the SEC has saying that this yield product is a security. Coinbase wants an explanation. They're saying that they're not really getting any. And I just wondered, what was your reaction to Coinbase getting this Wells notice, which is an intent to sue based on this product?
Yeah, obviously, I don't have visibility into specific deliberations between Coinbase and the SEC. But what I would say is, our yield service, which has been in the market now, and we're actively offering it, we actually structured it as a security, and we only offer it to accredited businesses, and it, is operating under, the rules of exempt, securities in the United States. Now, that was our analysis when we decided to make this product available. I can't comment on other firms' approach.
So you think it's quite clear that these products are like securities? They should go through rigorous...
Well, for what we intended to offer in providing a way for businesses to invest their USDC and earn a fixed income return, it did really strike us that it would be best structured as a security.
So BlockFi is also being investigated by several states, Alabama, New Jersey, Texas, saying that their lending product is probably a security and they shouldn't operate in the states. BlockFi is saying that perhaps the SEC should just have a blanket rule on these products. Would you agree with that line of thinking?
I would completely agree that the industry needs clarity here. And obviously, we don't face retail investors, and I think investor protection concerns really are paramount for retail investors, and I think that's where a lot of the scrutiny is. But I would agree, there is no regulatory framework for crypto lending in the United States. We had to find a regulator that wanted to supervise crypto lending activity because that doesn't exist in the United States yet.
Mm-hmm. Looking ahead, what is coming up for Circle? You're going public with the merger with a SPAC that values Circle at about $4.5 billion. Tell me a bit about your path going forward and your vision, your journey of becoming a bank.
Yeah, there are a lot of pieces, obviously. Earlier this year, we raised $450 million, and so we're in significant investment and expansion mode, building out different product lines of businesses. Obviously, there's a process of becoming a public company, which is a journey we're on, and that will take whatever time it takes. And then yes, I think as we've looked forward and we've thought about ultimately the nature of a global scale stablecoin such as USDC and the other products and services that we ultimately want to build around it, we made a decision that we did want to pursue this path of becoming a national, full reserve digital currency bank, which hasn't been done yet. So it's going to be a journey. I don't expect it to be a quick journey, but we're excited about what that represents for the industry and ultimately what we can build.
Mm-hmm. And what kind of insights are you getting at this conference? You're speaking to a lot of hedge funds, the people in traditional finance. Is it an education for them, or are they on top of things and they truly are interested and want to get on board?
It's amazing. I mean, I wouldn't have expected a year ago or 2 years ago that SALT would be overrun by crypto firms and being on the agenda and everything. I think it's been really interesting. I mean, so many funds, investors, family offices, others, not yet in the space, but really trying to figure out how to get active in this space. So I think it's a learning curve for a lot of people. There's so many new things, DAOs, NFTs, DeFi, what is this? I think people are finally getting their arms wrapped around, I could have an allocation of Bitcoin in my portfolio, but then when you open the kind of Pandora's box, it's like, wow, there's so much there. So I think people are really just trying to get their head wrapped around all of the dynamic things that are happening.
And do you feel that the way USDC has been structured and the operations behind it has been more geared toward alleviating the concerns of risk for those types of investors?
Yeah, I mean, I think there's folks that want to actively own something like Bitcoin or Ether, and then through USDC yield products, there's a way to participate in the market without directly purchasing something like Bitcoin, and I think that's attractive to a lot of people.
Right, Jeremy, appreciate you coming on the show.
Christine.
Always a pleasure, and seeing the growth of Circle as well as USDC taking over the markets. Appreciate your time.
Thank you so
was
much.
Circle CEO Jeremy Allaire. Coming up, Coindesk Global Policy and Regulation. We're going to have an update with Managing Editor Nick Day, and we'll catch up with former OCC Chief and Binance US CEO Brian Brooks. Welcome back. Time to check in with Global Policy and Regulation Managing Editor Nick Day, who is also the editor of the State of Crypto newsletter. Welcome to the show, Nick. So Gary Gensler, the chair of the SEC, he has an appearance before the Senate Banking Committee this morning. He released some prepared remarks. What do we expect?
Good morning. Yes, Gary Gensler published his written testimony, and I think the key thing for me is, he kind of reiterated his existing talking points about, crypto companies interacting with the SEC. He's encouraging them to reach out. He's, said much the same as he said before about, looking for more information around the markets and stuff. But the key thing to me is that he said, in his view, any crypto trading platform or exchange that has, 50, whatever, a large number of assets listed probably has listed at least one, security, one asset that is could be deemed a security under the SEC's purview. And therefore, he thinks that these trading platforms should register with the SEC as a securities trading platform, which, in practice, who knows how this will play out, but it kind of feels like he's saying, any crypto exchange operating in the US that has listed, anything beyond Bitcoin and Ether should probably register as a securities platform with the SEC.
So, Nick, that's almost a Canadian approach, isn't it? Where you have the securities regulator regulating exchanges, basically, like we have with Ontario, correct?
Right. And yeah, that's exactly the difference between the US and Canada right now. Canada has these security regulators overseeing crypto trading platforms, but the US doesn't really have a federally designated regulator for crypto trading platforms. The spot markets are, sort of under the CFTC's purview, but the CFTC has said, we're only looking for fraud and malicious activity. We're not regulating the actual spot trading activity, whereas the SEC's purview is limited to securities trading, and that leaves a kind of gray area for exchanges that are, listing things like Bitcoin and Ether.
So, Nick, there's another thing from Gary Gensler that came out in the Wall Street Journal yesterday, which doesn't seem connected to crypto, but might be. And that is, Gensler said in the journal that the SEC might be forced to ban certain Chinese companies, a couple of hundred at least, from trading in the United States, not because of the companies themselves, but because in many respects they can't audit the auditors. U.S. regulators can't look into the books of the people who are auditing the companies that are trading in the U.S. And while that might not seem on the surface related to crypto, of course, we have the largest stablecoin operator out there, Tether, with a lot of commercial paper and some suspected to be traded in China. Is this related in any way to what the FSOC is doing and looking at whether or not stablecoins are a financial threat? In other words, are they saying, look, these companies are being audited by questionable auditors themselves. So if they're graded A and above, at least in China, that might not be correct. Therefore, could we see a ban on Tether in the U.S.?
I agree that I think, what Gensler said about auditing the auditors for, publicly traded Chinese companies might be related to the crypto industry. I think it's even broader than, specifically stablecoins or anything. A key theme of the SEC over the last couple of months has been looking for as much information as possible about these companies and assessing, what sort of oversight it should actually have versus what it currently has. And so, I can easily see the SEC saying, yeah, we need to be able to audit, these companies and the auditors that are looking after these crypto firms, because there's currently no protective oversight in place for a lot of them. As far as stablecoins go, Gensler has said in the past that he thinks, stablecoins that are backed by securities are themselves securities. And so that does seem to be a pretty strong argument from him about why, things like USDT, USDC might fall under the SEC's purview and, require registration and all of the legal hoopla that the SEC enforces.
Yeah, and really interesting to get Jeremy Allaire's perspective on that as well. Everyone is awaiting with bated breath to see what regulators and what they do going forward. Nick, thank you so much for joining us. Appreciate your insights. That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. All right, well, our next guest led the Office of the Comptroller of the Currency during the Trump administration. He then went on to approve various crypto-friendly regulations, including approval of a federal bank charter to crypto-native company Anchorage, as well as permitting banks to use stablecoins in payments. He then led Binance US as the crypto exchange's CEO, but after about 3-4 months, he's now a free agent. So joining me now is Brian Brooks himself. Welcome to the show, Brian. Great to see you in person.
Thanks for having me. Good to see you.
Great to have you. So, yes, everyone, I want to know what happened at Binance US in that short tenure, about 3-4 months.
Look, there's only so much one can say in these contexts. It's a great company with a great team, and I think amazing potential ahead of it. I think, the thing about founder-led companies is that sometimes you have strategic differences, and it's like, look, there's a direction we can go to the right, and there's a direction we can go to the left. this is my vision, this is the founder's vision. At the end of the day, it's the founder's company. What I would tell you is I think I will have some exciting news, maybe to break on your show in a few days, possibly like in a week or so.
We love that.
So there'll be some cool things to come. But in the meantime, look, I wish these guys well. They're super competitive. They're well positioned to do well. Having said that, it's a really complicated environment out there, and you have to navigate it carefully.
Was there any concern that Binance was doing anything illegal or untoward or going down that path?
I would never have joined the company if I thought that what was going on wasn't defensible. I think it's more about how do you want to address those issues, and there are a lot of different ways of doing it. And at the end of the day, the founder had, I think, a different vision than I did about how to do that. Yeah, which is totally fine. He's an incredibly smart guy who's built an amazing global business. My view about navigating U.S. waters is a little bit different from his.
How does that differ?
I can't get into the details, as you can imagine. All I would say is lots of exciting things ahead, and that is a different conversation, which I think you'll like having.
I'm excited about the path ahead for you. Obviously, a lot of opportunities. But just one more thing, because when you joined on, there was a lot of excitement that a big U.S. regulator was joining a crypto exchange. But at the same time, we also, without much fanfare, saw the departure of Catherine Coley as CEO of Binance US. Not even a word, and nobody really knows where she is or what she is doing now. Any understanding or word about the departures at Binance?
Yeah, I mean, look, when it comes to Coley, I had spent a fair amount of time with her on panels and things before I joined. I think she's a huge asset to the area, and my understanding is she's been actually at a couple of crypto conferences in the last 6 months. I think she was at ETH in Paris, for example, I heard. So I'm not sure what her strategy is. I think for a lot of us in the space who think that we have a really big idea that we want to get launched, the trick is to make sure to keep it under wraps until you're ready for the reveal. So I don't know, but if I had to guess, she's got something to reveal at some point, and we'll find out about that when it happens.
All right, and another departure that was a surprise to a lot of people was the CFO, Wei Zhu. And I don't know if you had any interaction with him, but he was also unceremoniously departed from the company.
Yeah, in the case,
which is a pattern, if you can see what I'm talking about.
Well, look, Wei was on our board briefly when I first joined, but of course he worked for Binance.com. He was not an employee of Binance US, so my interaction with him was just in the context of a board membership. I'm not sure what happened there, to be honest, but then again, in a really big company, I mean, if you looked at JP Morgan or Goldman Sachs, you could find 10 people who left last week, and each one is a good story. So I'm not sure what Wei's story is, but it was interesting when it happened, obviously.
Fair enough. All right. So exciting news for you. Now you're at Salt. A lot of crypto companies here, a lot of investors, hedge funds, and whatnot. So what kind of conversations have you been having? And perhaps you could give us a tease onto your steps going forward?
Well, here's what I would say. I think there are a couple of really interesting things here at Salt, Christine, mostly not having to do with the crypto companies, but with all the suits around here. So if you walked into the main stage yesterday, what you would see is
to the pullover ratio.
Totally. So the number of asset managers and compliance firms and hedge funds and others, the Wall Street Journal story that Steve Cohen, who I saw at Drinks last night, is buying a crypto company. That's the news of Salt this year, okay, is that crypto is going mainstream. And what I'm really excited about, if I was going to give you a little bit of a tease, is I think that there are a lot of companies that are starting to invest in the infrastructure to make this stuff scale, right? So people are proud in our industry that we're a $2 trillion industry, but we should be a $15 trillion industry. And so how do we get there? How do we break out of this Bitcoin 50,000 sort of ceiling that we're at? And I think the answer is you need major institutional adoption, not one or two companies, but you need all the companies on that main stage to invest. And that means mainstream asset management. It means large-scale custody. It means crypto-native compliance solutions, not bank-native compliance solutions. And there are a bunch of companies innovating and building these things. So the question is, if you could be on top of one of those companies making the world safe for crypto, that's the tease, that could be awesome. So I think picks and shells businesses of the future, and that's why the banks are here at this conference.
That seems to be a thing among other regulators we've spoken to. For example, former CFTC chair Chris John Collier saying that this is a new industry. It needs a new set of regulations, not based on rules and regulations that were made 100 years ago. And so regulators appear to be trying to figure that out now. Just going back to Binance for a second, they're going through a lot of scrutiny among global regulators around the world. I mean, a criminal complaint in Thailand, the UK financial regulators saying they're not authorized to operate. Ontario, same thing. Various countries all seemingly coordinating a global crackdown on Binance. Do you think that scrutiny is deserved?
Well, there's the question about the scrutiny on Binance, which, I can't speak to in those countries. And then there's the question of scrutiny of the industry, which I think is what Chris Giancarlo was talking about. And I think one of the big issues that we face is you've got an industry that was born out of an idea that the regulations that exist for regular finance are constraining growth and freedom, which I 100% agree with. And then you've got a view on the part of the regulators that the state of nature is banking regulation and securities regulation, and any new thing you do has to fit within this. So the analogy I always give is what my friend Balaji Srinivasan used to talk about how when YouTube was launched, there could have been a question of, should YouTube have to get a broadcast television license because they're distributing television content? Clearly not, right? They're not broadcasting on the airwaves. And yet, when bank regulators or securities regulators ask crypto companies how they're complying with bank regulations, the answer is, we're not doing banking. We're doing something really different. So I think that you need a framework that governments can live with, but the framework shouldn't be that nobody's allowed to do anything that doesn't fit within banking regulation, right? The framework should be crypto's a whole new activity, allowing people to interact in an entirely new and freer way. So what's the right way to make sure that people aren't getting defrauded while allowing them all the benefits? Don't protect me from 4% interest rates, okay? Let me get access to that in a way that makes sure I'm not defrauded. That's the way forward, and we got to work with the government to understand that settlement.
Right. Another issue is FSOC, the Financial Stability Oversight Council, is exploring whether or not they should really investigate stablecoins and whether or not they pose some sort of financial danger to the stability of the markets. During your tenure under the OCC, you had a different approach towards stablecoins. The guidance given to the banks was that they could actually use stablecoins for payments. So I wonder whether or not you view the value in stablecoins differently from the current administration.
Well, I mean, look, what is unfortunate is there's a little bit of crypto that's becoming political, right? And part of it is there's a freedom crowd, which represents probably 55% of the Congress. I say that because look at the infrastructure bill. There were 6 or 7 Democrats on the side of the industry and about 49 Republicans on the side. That's bipartisan, but heavily weighted on one political side, right? Most of the other side wanted to tamp down on this the same way they want to tamp down on banks. So that's unfortunate. To me, the message to America is we didn't just discover stablecoins in this administration. The FSOC in the last administration, and the president's working group in the last administration gave comprehensive guidance about stablecoins, the purpose of which was to, on the one hand, protect buyers from fraud, but on the other hand, to allow people the advantages of stablecoins. And what I worry about is that in this environment, people have forgotten about the advantages, and it's all about a crackdown. So I think that's the mistake here. Fundamentally, remember, the OCC guidance that was released under my watch hasn't been rescinded. And that guidance wasn't just that banks can use stablecoins. It was that they can connect as validator nodes on things like the Ethereum network, right, to maintain those networks. And my message is small banks and mid-sized banks who feel like the big banks own the current payment system have a huge opportunity here as validator nodes on new networks to not be beholden to the biggest banks, but to free up capital and to free up access to payment systems for more people. That's what we were all about, is more freedom and more innovation.
Well, that's huge, and you certainly left your mark on the OCC, and hopefully we'll see as the regulation continues, there'll be more positive and productive developments going forward. Brian, thank you so much for joining me. Appreciate you coming on. Always a pleasure, and really excited to see where you go next. We want to know. We want to know.
I'll be here, Christine. Thanks for having me.
All right, that was Brian Brooks, the former OCC Comptroller of the Currency, as well as former CEO of Binance US. Thank you, Brian. All right, coming up, checking in on Asia and the creator of one of the top performing cryptocurrencies of the year, Solana.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
So as we reported earlier, Bitcoin and Ether are back up today. So is the worst behind them, or are sell-offs going to continue? Joining us now is Anastasia Amorosa. She's the Managing Director and Chief Investment Strategist at iCapital Network. With Grayscale, they have a partnership letting 6,700 registered investment advisors and independent broker-dealers have access to Grayscale's crypto funds. Grayscale is owned by DCG, parent company of CoinDesk. Hello, Anastasia.
Hi, Lawrence. Good to see you.
Good to have you. So, in your view, what caused the big sell-off and subsequent rally in Bitcoin over the past few days? Do you have any insight as to what's going on in the market there?
Well, I think near term, things tend to be very technically driven. And I think that's what's been happening. We've seen a monster rally in Bitcoin over the summer, and it doesn't surprise me. You probably had some profit taking and some sentiment pulling back. And then you were having this conversation about the Fed potentially tapering in September. And what does that mean for rate hikes? So I think all of that played into a bit of a consolidation. But as you guys pointed out in the newsletter this morning, Bitcoin is trading at a key technical trading level. And as long as it sort of consolidates around these levels, you could see some buyers come into the space. Now, I will say, as a longer term focused company and focused individual, I tend to look through some of these near term pullbacks. And I have to step back and say, what is the longer term opportunity here around Bitcoin and crypto assets? And as we all know, this is an emerging nascent asset class, but it's going to continue to grow rapidly and measurably. And that's why for our clients, for our financial advisors, we want to make sure we have a longer term strategic allocation to crypto.
So, of course, as you mentioned, it's not just about Bitcoin. It is also about other cryptocurrencies. Do you think we're going to start to see an acceleration into the altcoins and a rotation out of Bitcoin, in fact, and perhaps even out of Ether and into the altcoins? Or are we going to see perhaps, some growth in Ether and a lot more growth in the alts, or vice versa? How do you see that? How do you see among the three general sorts of classes here, ETH, Bitcoin, and alts? How do you see that playing out?
Yeah, well, clearly there's a very specific return drivers for each one. But I will say that a lot of individuals, as they embark on the crypto journey, they learn more and more, and they add to their kind of arsenal of things that they want to be participating in the crypto space. So we should certainly not discount Bitcoin, because I think that's a massive potential for future adoption of that particular cryptocurrency in the payment system. This is a $200 trillion global consumer payment system. And if some of that shifts towards settling transactions in Bitcoin, I think that's a massive opportunity. And that's one of the things that makes us have an optimistic, constructive view on this space. But as you pointed out, there's over 6,000 different protocols out there, and they're finding different applications. So I think individuals, investors should think about more to crypto than just Bitcoin, and participate in some of those altcoins as well. Now, I did say there's over 6,000 of them out there, and not every protocol is the highest quality protocol. So we want to be careful, and we want to make sure that we focus on some of the larger cap coins that we can quantify some of the potential.
Yeah, along those lines, you have this partnership with Grayscale, and it involves your RIAs and the broker dealers. It allows them to invest in some of the majors through Grayscale. Some of those funds include things for, say, Bitcoin Cash or Litecoin. Is there any demand among these RIAs and among the broker dealers for things like Bitcoin Cash or Litecoin? Or is it still, are those sort of like, oh, nice to haves, but not really of interest? We'd rather put it in the likes of, Chainlink and Cardano and Bitcoin itself.
Yeah, well, Lawrence, as I mentioned, this is a journey. And for many financial advisors, candidly, this is the beginning of the journey. The fact that we do have a product that is registered and that is reporting to the SEC, and we're now offering that to financial advisors, that is their first entree for many of them, probably into the space. So I think it's going to be a big learning process, a big education process, and I'm sure it will take time before some of the other altcoins are going to go mainstream with the financial advisors. But I will say, broadly speaking, there's a lot of focus on crypto space from financial advisors and their clients. We see that from surveys. We see that from client conversations. We see that from family offices. 45% of family offices plan to allocate to crypto, and I think something like 30% already have. So I think the demand is there, but as we do collectively as an industry a better job at educating advisors and clients about what's all out there and what are the use cases for different protocols, I think the demand for that is going to pick up.
Nonetheless, after you educate those investment advisors, what obstacles remain in getting them into crypto? What concerns do they have in getting their clients into digital assets?
Yeah, I'm glad you brought up the concerns because there's definitely a list of concerns that needs to be addressed. And I will say regulation is right there at the top of the list. As you talked about on the show, it's really not a matter of if the industry is going to get regulated. I think it's a matter of when and how exactly is the industry going to get regulated. So for a lot of our clients, I think there's actually a silver lining to that, because I don't think the regulators are going to regulate the industry out of business, but instead they're going to put guardrails and framework and really sort of legitimize the industry by adding some of that regulation. So it's a risk, it's a concern, but also the fact that there's so much focus on it, and I think productive discussion that alleviates some of the concerns. The other big one I will say, and this is often in the headlines, is the security risks and breaches and potential risk of fraud. So as the former guest just said, this is investment in the crypto ecosystem, and we're going to need to continue to invest in security and make sure that we alleviate those concerns.
Well, regulation is definitely a growing business, if you will, across the board in the crypto industry. So that will be watched, of course. Thank you, Anastasia Amorosa of iCapital Network. Now back to you, Christine Lee, over at the SALT conference. Are you guys having fun there?
We're having a good time, Lawrence. I saved you a seat here whenever you want to come. The chain smokers are on tonight. All right, time now for the daily forecast and update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the daily forecast, September 14th, 2021. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Scams and hoaxes are always a worry for investors, and we've got plenty to investigate today. They include rumors of a hack at Hong Kong-based crypto exchange FTX, a scam alert over fraudulent tokens from Animoca Brands, and a fake news release suggesting Walmart would accept Litecoin. We'll sort the truth from the fiction. All that and more coming up. Let's get you up to speed from Asia to the world. First up, they say bad news comes in threes. Well, that now seems to apply to fake news as well. Forecast News' Lachlan Keller reports.
A few days ago, rumors began circulating that FTX may have been hacked, with a total of over 45,000 Bitcoin, worth more than $2 billion US, being moved out of FTX's wallet across hundreds of transactions. CEO Sam Bankman-Fried addressed concerns via Twitter, explaining how, as part of Bitcoin withdrawal processing, unspent transaction outputs, or UTXOs, were consolidated into a single wallet to speed up processing. Meanwhile, blockchain gaming firm Animoca Brands has been hit by a scam. It issued a warning over an ERC20 token on Uniswap V2 that fraudulently claimed to be from the company. Scammers reportedly directed would-be investors to a fake Telegram channel, where they were pressured to take part in the sale. The company says it will take all necessary action against the operators of the fake token. Outside of Asia, Litecoin saw a momentary 33% leap in its price as a widely reported hoax claimed the retail giant Walmart was planning on accepting the cryptocurrency. Walmart issued a statement to say that the press release on Global Newswire was a hoax within an hour, with Litecoin swiftly following suit. For Forecast News, I'm Lachlan Keller.
Meanwhile, with just 10 days left before Korea's new crypto exchange regulations come into full effect, we're seeing more moves for survival. Forecast News' Danny Park has more.
In an update to its Death Note, the country's Financial Services Commission says 28 out of 62 exchanges will now be able to operate after the given deadline. 3 weeks ago, the first note predicted just 21 would survive, meaning 7 more have now made the cut. 24 of the 28 have met only the first of the FSC's 2 requirements, gaining the Information Security Management System certification. They can continue operating after the September 24th deadline, but under one condition: they cannot offer cash-to-crypto functions. Meanwhile, major banks remain hesitant to provide real name accounts, which would allow these exchanges to comply with the FSC's second requirement because they see more risk than profit. However, some of Korea's regional banks are reportedly looking into such partnerships as a way of attracting new customers. With Korea's population declining outside of the capital, Seoul, Jeonbuk Bank and Jeju Bank are both said to be reviewing partnerships with exchanges positively. For Forecast News, I'm Danny Park.
Finally today, more backlash against NFTs in China. Just yesterday, we reported on an opinion piece criticizing NFTs as a hyped-up bubble. Now another state-owned media outlet is weighing in. Timmy Shen reports from Taipei, Taiwan.
An article in Beijing Business Today focused on an NFT platform called UMX Art, saying there are risks buyers' cash could be held onto by the platform's account as they are asked to make payment before placing a bid on an auction, with the platform saying users will be refunded if the bid fails. Li Zhang, co-founder and CTO of UMX Art, told Forecast News the company has a separate account dedicated to user transactions with strict internal rules banning transfers from it to other company accounts. Concerns are also raised in the article as UMX Art released a notice on September 3rd saying that WeChat had halted its payment services just days prior. Zhang says there could be several reasons for the suspension, but the main issue could be the number of refunds the platform needs to issue after an auction wraps up, and the company is raising complaints with WeChat in order to resume the payment service. The article also criticized NFTs more broadly, highlighting their speculative nature. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
Now, despite the backlash and the debate on their value, recent sales volumes for NFTs show the market isn't ready to cool down, at least not yet. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, at the beginning of the year, the price of Solana, a major competitor to smart contract protocol Ethereum, was just under $2. At its peak, Solana this month skyrocketed to over $200 and now sits around the $160 mark. That's a price increase of about 8,000% year to date. Earlier, I had a chance to speak to Anatoly Yakovenko, CEO of Solana Labs, the creator of Solana, about the wild success they've experienced.
Yeah, I mean, I think the pressure's just higher, right? But the work is the same, right?
Okay. When you're giving your elevator pitch, and to many mainstream investors, this is the first time they're hearing about Solana. So I'm curious, what are you telling them? What do you say?
Well, the technology, blockchain is a way to revolutionize finance because it allows software to eliminate risk, right? Like all the human processes that people do in banks and in trading firms and brokerages, that's all can be done with software, can be completely risk-free. You can have like instant global settlement, in 400 milliseconds. So it's a different world.
So how are you differentiating yourself to say, and the nearest comparison I can think of would be Ethereum?
Well, if you ever used Ethereum and Solana, I think the differences are pretty clear. Like the cost and speed. Yeah. Solana is designed primarily to be the cheapest possible way to run censorship resistance around the world, right? And that core piece allows it to be the cheapest possible way to run blockchain systems, to run transactions. So you compare our stack or the stack that the protocol runs with something like Ethereum, you'll see, 10,000 time improvement in price and speed. And that's pretty critical for finance.
And what can you say about the supply, and how did you figure out that problem that Ethereum has in terms of lag, high gas fees, and such?
So my background, I spent my career at Qualcomm. It's a company that builds, hardware and protocols for wireless networks. If you have a cell phone in your hand, there's probably a chip in there that was built by Qualcomm. There's probably something on it that I worked on. So it's just kind of, I guess, part of the DNA of our team is that we've built networks that have scaled to billions of people around the world that are focused on cheapest possible way to do communication. Blockchain is another form of communication. It's a really, it's a revolutionary new technology. This idea of perfect censorship resistance has never existed before. So it's a really fun engineering challenge, but it's still a communications network. And we've built it optimized for that purpose, right? How do we send information as fast and cheaply as possible everywhere around the world?
And so who are you seeing building on Solana right now to take advantage of the throughput, the cheaper gas fees, transaction fees rather?
Some of the biggest use cases are, something like a Circle's stablecoin, USDC. Over $2 billion have been issued on Solana already. And something like Serum, which is a central limit order book style exchange that's operating as a smart contract. So imagine everything that NASDAQ or New York Stock Exchange do as a single smart contract running in a blockchain. With extremely high guarantees for availability, for security, for uptime, for throughput. This is pretty revolutionary, right? These things could not have been built 10 years ago. They just got built over the last year, and the community that's building on top of these tools and the developers and the tools and the users has grown exponentially.
In terms of that community, where do you see it building the most in terms of geographically? Are there any trends in that regard?
It's been like when you look at our hackathons, like the last hackathon, the DeFi one, had 13,000 registrations, and it was pretty spread all over the world. So, you expect, the things you expect is United States, Europe are the vast majority of the folks, but you see quite a lot of demand coming, from Asia, Africa, even South America.
Mm-hmm. Well, you mentioned Circle, you mentioned a Serum project, which is led by or co-founded by Sam Bankman-Fried of FTX. We're also hearing about the Degenerate Ape NFT platform and the Aurori. Tell us a bit about that. And by the way, that NFT, the first $1 million NFT got sold, a Degen app on Solana. So congratulations on that.
That's pretty exciting. So NFTs and Solana really exploded after this project that was incubated at Solana called Metaplex built the standard to how to monetize secondary trading. So artists, when they mint an NFT, and they want a portion of the secondary sales, in perpetuity, they can define that in software as a smart contract. So it's really almost like all the financial infrastructure that you see in art can be defined as a piece of software, right? And that what really allows artists to now scale globally with extremely high volumes, and the prices that you see like for fine art or high art. That's the really exciting part to this, is that this financial software is not just eating trading and the banking system, but everything in the world we do is finance, and the software is able to eat, every part of that.
Okay, and that's another one. It's kind of like the Axie Infinity. Does it feel kind of like everything that is in the Ethereum ecosystem that is doing really well is kind of transferring onto Solana?
I think the reason for that is that, you see stuff with product market fit and teams that want to build it faster and cheaper and scale to a large number of users. They're not looking at, do I build this on Ethereum and grow within the Ethereum ecosystem? Do I build this thing, which is whether it's an NFT art movement or a game, like a new play to earn game, and do I build it for the entire world, right? If your vision is like, I want to build this perfect play to earn game for the entire global gaming community, the underlying chain is a piece of technology and you're going to pick the cheapest, fastest one. The one that's... Yeah.
But nevertheless, a lot of blockchain developers have learned Solidity already. And so how do you get them to develop on Solana and learn Rust and C, I believe? Yeah.
In my entire career, every 2 years, I had to learn a new stack. So as an engineer, that's just kind of expected. Okay. It's not a big deal. And the folks that can't, those are the ones you don't hire.
Fair enough. All right. And so where do you see Solana going from here?
Well, the network is, what is the goal of any open source project is to, get enough people building and working on it so it's unkillable, because people are having fun just building on it on their free time over the weekend. And this was really like the magic of Linux in the 90s. When Microsoft tried to kill Linux, they didn't understand that no matter what, I was going to continue working on Linux, on the weekend, because I was having fun doing it. I was learning. And that's really where you want your open source community and project to go. And it feels like we're already there, and it's just amazing to see that grow. And my goal is to be, the Linux of Byzantine fault-tolerant operating systems.
How do you see it existing in comparison to Ethereum, to Algorand, to other, or Cardano, even other smart contract protocols within that? Will it be kind of like the way we see Hotmail and Gmail today? But mind you, Hotmail is no longer. Yeah. And just like could that happen to Ethereum? I don't know.
I think these are more, are you comparing like broadcast radio versus internet and like point to point? There's different, they have feature overlap, right? They all do the same thing, but they have such different technologies. There's just some use cases that can run on some versus others. If like the key factor that these systems are optimizing for, if they're useful to somebody, right, then they're going to survive. If they're not, right, then they're not. The way Solana's design is, in mind, literally in our seed level slide deck, it's that Solana is blockchain at NASDAQ speed. So the dragon we were trying to slay is like these big firm trading systems like NASDAQ, like NYSE, that maintain a monopoly over their markets, over their data. And you see things like Pith and you see things like Serum that have really turned that whole model upside down, right? You can have the same exact central limit order book, high-speed trading, globally settled or, and executed in milliseconds, and extremely high-fidelity data from Pith without any intermediaries. Right, that's the key thing, right? Can you build something that's useful for humans at the end of the day?
That was Anatoly Yakovenko, CEO of Solana Labs. That's it for All About Bitcoin. Join me later on today. Thank you, Lawrence Lewitinn, Coindesk Managing Editor of Global Capital Markets. Later on today, I'll be live at 3 p.m. with All About Bitcoin. Right here at the SALT conference, we'll have interviews with FTX US President Brett Harrison, as well as LMAX Group CEO David Mercer. Coming up at noon is The Hash. You're watching CoinDesk TV.